Hey guys, Toby here, and today we're going to be talking about a tax credit. A lot of you guys don't realize that you have available to you. And by the way, when I say tax credit, that means dollars in your pocket. That's not a deduction. That means money that you actually get to receive. So I brought in an expert, Savannah Wallace, one of our fantastic attorneys here at Anderson. Tell us about the tax credit.
Yeah, so this is the Eligible Automatic Contribution Arrangement, or EACA, so it's not so much of a mouthful. So with this tax credit, you get $500 per year for up to 3 years if you have an eligible solo 401k retirement plan. Like Toby said, it's not a tax deduction. It is a tax credit to directly reduce how much you may end up owing in taxes. Now I say you, I mean your sponsoring entity. So if this is your construction business, or maybe this is your real estate development business, whatever that sponsoring entity that you have in place that sponsors that solo 401k plan, it gets to claim that $500 tax credit.
All right, so let's dive into this a little bit. Is this a tax credit? Is it a refundable tax credit, or does it you just get to use it if you actually owe taxes?
You just get to use it if you actually owe taxes. So if you don't owe taxes, it's not going to increase a refund for you.
Do you lose it if it comes through and you get this, and or do you carry it forward? Is it one of those things?
It's not something you're going to carry forward, so you just have those 3 years once you put it into place that you're able to claim it.
All right, so you have let's break this down, because there's IRAs, there's SEP IRAs, there's 401ks, there's solo 401ks, there's defined benefit plans. Of all those that I just listed, which ones are eligible for this tax credit?
The 401k and the solo 401k. But what's most relevant to you likely is going to be that solo 401k. And this is really the only tax credit that's going to be available to you as a solo 401k. Because what you might be familiar with, and what other CPAs may know about, is that startup cost credits. But that's only available to your traditional 401k plan. It's not something that solo 401ks can take. So this is a really nice carve out that the government gave us through the Secure 2.0 Act to give us a little bit of a benefit and incentive to have those retirement plans in place.
Okay, let's break this down. So what exactly is the difference between a traditional IRA and a solo 401k?
So the difference between a traditional 401k and a solo 401k, with the solo 401k, this is going to be a retirement plan that is sponsored by a business that you own or you and your spouse are a part of, not one that you have employees. If you've got a business where you have employees, then you probably have either a traditional 401k plan, potentially even a SEP IRA. But if it's just you and your spouse, it's going to qualify as a solo 401k.
And so this tax credit, though, applies to both the 401k and the solo?
It does.
All right, so you're going to get this tax credit. It's $500 per year for 3 years?
So up to $1,500.
All right, let's talk about this for a second, because a lot of you guys are thinking, hey, I've always wanted to have a 401k. I don't like the expense because you're adopting a plan, a company plan, but I know I could put, what can we put aside, about $24,500 as an employee?
As an employee,
And then the employer can match 25%?
Of their salary, yeah.
And then what's the top level right now in 2026?
$72,000.
And if I'm over, I got gray hair?
Then you've got some catch-up contributions up to, it's another $11,000 up to that.
Yes, I get that. That's the one benefit of getting old, is that you get to put some more in there. Okay, so it's tax deductible in that case. How about if I'm doing a Roth IRA and I'm putting $20,000 into a Roth? Do I still get the credit?
You still can take that credit. Well, if you've got the solo 401k, maybe you've got a Roth component part of that solo 401k, totally fine.
All right, so for those of you guys who have a 401k, you're not out of luck either, right? If you have an existing plan, I've had one for 10 years, do I still get the tax credit?
You do. So this is for new as well as existing plans. If you do already have an existing solo 401k plan, then all you need to do is amend those plan documents to include this EACA language. That's all you need to do. And that language that needs to be in there is essentially, it's got to say, hey, I'm going to automatically contribute at least 3% every year of my compensation to the plan.
All right, if you have a plan, I'm just going to say this, put a comment down in there in the show notes. If you're interested in the language, I'm sure we can figure something out to make sure that you know what language needs to be amended into your plan. If you don't have a 401k, then I would suggest that you set up a time to talk to somebody like Savannah, and we'll give you a free consult where you can talk to them to see whether it's something that might be appropriate. Because you get a huge tax benefit,
Oh, yeah.
but this is funky because they're going to pay you to do it.
Yeah, essentially the government is paying you to start your own solo 401k, have a retirement plan. And I do want to add one caveat, because you may be thinking, okay, so I'm going to go start a business to get this plan up and going, but maybe I won't be making money, so I'm not going to be taking a salary quite yet. So you're thinking, am I out of luck? I'm not going to make that 3% contribution. You're not. You just need to have that language in there. And then you can opt out of those automatic contributions. The key is just having that language in there. You don't have to make that contribution to be eligible for that EACA tax credit.
All right, so that's a huge one. So there's this language that has to be in the plan document, but you don't have to do it.
You can opt out of making the contribution.
It's automatic, is what I want to make sure we follow.
Yeah.
So we put it saying this is automatic unless you opt out. So you change your plan, or if you're putting a new plan in place, you make sure it has this magic language, then you said, but I'm okay.
Exactly.
And could I do this, like let's say I have an IRA from a previous employer for their 401k. I rolled into an IRA, and I got $100,000. Could I set up a business, have a 401k, sponsored by that business, and roll that $100,000 in there, and still now I have the 401k?
You sure can. So if you have existing IRA plans, like Toby was talking about, maybe you rolled it over from an old W-2 employer, you can roll that IRA into the solo 401k to fund it.
That sounds like the government, and this was under the Secure Act?
Yes, Secure 2.0.
But it just became effective in
2025.
So this is a fairly new, like the law was passed a few years ago.
2022,
2022. So, but it just went into effect at the end of last year in 2025. And so people were amending their plans last year at the very end of the year. I remember that kind of going on, and they're like, oh, I want this 15. If you missed it, you didn't miss it.
No.
Because it's for 3 years, right?
Yes, as soon as you put it into play.
So you're still going to get your $500 a year for 3 years, so it's $1,500. And again, this isn't a deduction. This is a tax credit, so whatever your tax liability is, it's just like cash applying against that. It's kind of like if you went to Amazon and they said, here's a gift card for $500. All you got to do is generate a bill of $500. In this case, all we have to do is generate a tax bill. So we need to have a little bit of profit in that in that company. How about if it's a S corp or a partnership? Could they also sponsor? And then can I use that if I'm the owner? Will it flow it down to me?
It will flow down to you. So if you've got a partnership or if you've got an S corporation, it will flow down through that K1.
So now you guys got some ideas. Put your thoughts down in the comments if this applies to you. If you have any questions about this, put it down below. And Savannah, thank you so much for sharing that with us.
Thank you, Toby.